Assalamu alaikum and a very good morning to all of you. This is Muhammad Azam Kutub, and the topic that I'm starting today is the partnership accounts. What do we mean by the term partnership? Now let's see. According to the Partnership Act 1890, partnership is a business when two or more persons work together with a view to earn profit, right? It's a long-term commitment to operate a business. Now we are moving ahead. The reasons on the basis of which the sole trader type of businesses want to shift their businesses towards the partnership, or people why they want to start a partnership type of business. There are certain reasons. The first one is to raise finance in business. This is the very fundamental reason. Why to raise finance? So that business can expand, so that more capital investment can be done. The second reason could be more partners means more expertise, more innovative ideas can also comes into your business, right? The third reason could be the responsibilities will be shared, and the last one could be loss will also be shared, right? These are some of the reasons due to which the persons want to start their businesses as a partnership type of firm. Now, we are moving towards the nature of partnership. Partnership is only formed in just in order to make profit, right? The second feature is it must have to obey the laws as given in the Partnership Act 1890, right? And normally there are 2 till 20 number of partners with the exceptions of banks. And bank banks which can have only 10 members or 10 partners, right? And similarly, there is no maximum number of partners limit for the accountants firm, solicitors, stock exchange members, auctioneers, estate agents, insurance brokers, etc. Right? Partners who are not limited are the general partners. Now, partnership agreement. Agreement in writing is not compulsory or necessary. It means partnership can also form by verbal as well as written agreements, right? It is highly recommended to draw up the agreement by the lawyers or the accountants. Why it is recommended to draw the agreement regarding the partnership? Just in order to avoid the future disputes or future disagreements among the partners, right? Now we are moving to see the contents of agreement which must have to be incorporated in the partnership agreement, right? The first one is the capital amount to be contributed by each partner should have to be incorporated in the agreement of partnership. Similarly, the second clause should have to be the ratio in which profit or loss are to be shared. The third one is interest on capital, then interest on drawings, salaries of each partner's, arrangement of admission of a new partner, or the procedure to be carried out when a partner or the existing partner or the old partner retires or dies, right? When partnership agreement is not made, for example, if the company fails to draw the partnership agreement, then it has to face certain disadvantages. What are those? Now, when no partnership agreement exists, then Section 24 of the Partnership Act 1890 governs the situation, which states that profit or loss are to be shared equally. right? Irrespective of the amount of capital that they have invested in the business, right? The profit or loss should have to be shared equally among the partners, right? The second drawback will be there is to be no interest allowed on capital. Similarly, the third one is no interest is to be charged on the drawings. Salaries are not allowed, right? Partners who put a sum of money into the partnership in excess of the capital they have agreed to subscribe the interest at the rate of 5% per annum on such an advance. Now, these were the drawbacks if the business partnership type of firm fails to draw the partnership agreement, right? Need now the final accounts. Final accounts, usually there are three types of final accounts which asked in the past paper questions of CAIE, right? The first one is P&L and appropriation account, and the second one is appropriation account. The last one is balance sheet. P&L and appropriation account, right? P&L and appropriation account is the statement in which it starts from sales till not net profit, right? Once the net profit has been derived, now the in partnership type of firm, the profit belongs to the number of partners that the firm has. Therefore, once the profit or loss has been derived, now it has to be it has to be distributed among the number of partners, right? Right? It's because it is not a sole trader type of firm, so that we can stop when we have identified the amount of profit, because it's a partnership type of firm, and in partnership type of firm the profit belongs to not a single partner, it has to be distributed among the number of partners that the firm has, right? Therefore, in the first statement, what we need to do, we have to draw a complete income statement and find out the amount of profit or loss. Now we have to follow further 2 to 3 steps more in order to make the appropriation of that amount of profit among the partners, right? Similarly, the second statement usually asked in the past paper is for the appropriation account. Appropriation account is such a statement in which the amount of profit or loss is already given in your question, and just a student, what a student is needed to draw. A student is supposed to just make its appropriation, right? It means a student is just supposed to distribute that amount of profit or loss among the partners, right? And the last one is the balance sheet. The format for the balance sheet is 100% same as you have already learned in your sole trader type of firm. The only difference is for the partners equity account, right? We will see it later. Now, this is the format for the first statement, which is profit and loss and appropriation account for the year ended 31st of December 2000X, right? Now, in this statement, what you need to do, you have to start from the sales. It means you have to draw a complete income statement, okay, which starts from sales. Here I have taken the final figures, means I have taken the net sales, right? Now what you need to do, less cost of sales in order to find out the gross profit, or in order to reach the gross profit, then add other income if there is any other income given in the question. Then what you need to do, you have to deduct all the operating expenses in order to drive the amount of net profit or loss. Once you have determined or reached the amount of net profit or loss, now 3 or 4 steps should have to be followed further. The first step is now what you need to do, In order to make the appropriation or the distribution of this profit or loss among the partner, the first step is to add the interest on drawings among the partners, right? Then deduct the interest on capital, right? Similarly, the partner's salary, if anyone or both or all of the partners are receiving the salaries, it should also have to be deducted from here, right? Similarly, you will find out the balance profit. Okay, okay. Now, what you need to do, finally, you have to distribute that amount of profit among the partners in the ratio what it is given in your question, right? The profit or loss distribution ratio can be given in any specified ratio. It can also be given in the to share the amount of profit, remaining profit or loss among the partners in the capital ratio, or if there isn't any clause given in the question, or if there isn't any clause given in the agreement of the partnership, what you need to do, you have to distribute the profit equally among the partners, right? Now we are moving towards the types of capital account only in partnership. There are two types of capital accounts in partnership. First one is the fluctuating capital, and the second one is the fixed capital, right? Now see what these are. Fluctuating capital. Fluctuating capital is where appropriation of profit and loss is allowed. Therefore, only partners' capital account will be made. Whereas fixed capital account is when the appropriation of profit and loss is not allowed in the main capital account of the partners. Therefore, two separate accounts are needed to be prepared. Okay? What are those? The partner. The first one is partner's current account, and the second one is partner's capital account, right? In the partner's current account, appropriation will be done here, whereas in partner's capital account, only additional investment permanent withdrawal will be recorded. Okay, it means no appropriation will be allowed in partner's capital account when the business is following the fixed capital account method. Okay. Now there is, I have mentioned here the format for the fluctuating capital in which the appropriation for the profit and loss is allowed, right? First you need to write First you need to write the opening balances, the BD balances of the partners. For example, here we have two partners A and B. The opening balance of the partner, you should have to write the normal opening balance of the partners exists in the credit side, right? Because it's a fluctuating capital, therefore appropriation for the profit and loss is allowed here. What you need to do, you have to just add the interest on capital, because it's a monetary benefit which has to be given to the partners in order to retain their amount of capital in the business, right? So that the liquidity of the firm can be maintained positively, right? It means, okay, interest on capital should have to be added, therefore it will be credit here. Similarly, the salaries or the bonus given to the partners will also increases the amount of capital, therefore it should also posted in the credit side. Finally, the share of profit should have to be posted in the credit side, right? Now look at those items due to which the capital account of the partners starts decreasing. Are first one is the drawings. Okay, due to the drawings, the capital account of the partners reduces, therefore it should have to be recorded in the debit side. Similarly, interest on drawings is a penalty which which is charged on the amount of drawings from the partner's capital, right? Therefore it reduces the amount of capital, therefore finally it will be posted in the debit side, right? For example, if the company is facing, if the partnership type of firm is facing the loss, then the loss will be shared in the, then the loss will be recorded in the partner's capital account in debit side, right? Finally, what we need to do, we have to find out the closing balances, the CD balances, which will be the BD balances for the next time period, right? Now we are moving towards the fixed capital method. Fixed capital method, as we have already learned, in the fixed capital method, appropriation is not allowed. Appropriation for profit and loss is not allowed. Therefore, we should have to draw two accounts. Okay? First one is the current account, and the second one is the partner's capital account. ठीक है. Current account is the account of partners in which appropriation for the profit or loss is allowed, right? All the format that we have learned in fluctuating capital account, ठीक है, you should have to write here. ठीक है, you should have to write all the same items in the current account of the partners, right? The first, you should have to write the opening balances of the partner's current account, which is given in the question. Okay. The normal balances of the current account of the partners exist in the credit side. Now, interest on capital, salaries, bonuses, shares of profit increases the amount of capital. Therefore, these will be recorded in the credit side of the current account. Similarly, drawings, interest on drawings or the share of loss or reduces the current account, therefore it will be recorded in the debit side. Finally, you should have to calculate the closing or carry down balances, which will be the opening balances for the next time period of the partners, right? Now what you need to do, you have to write a separate capital account. It means appropriation for the profit or loss is not allowed in the partner's capital account, right? Therefore, then only the permanent additional investment or the permanent withdrawal, only these two entries will be incorporated in the partner's capital account if the business is following the fixed capital method, right? Usually in the past paper questions, current account asks by the students to draw. Okay. Now we are moving towards the format for the partnership firm's balance sheet, right? The format for the balance sheet is 100% same as you have already learned in the sole trader type of businesses, right? The only difference is for the capital accounts of the partners. Okay. Capital account, if suppose we are supposing here the business is following the fixed capital method, therefore two separate accounts has been opened here. The first one is the capital account and the second one is the current account. Okay. Capital account, you should have to write the balances of the capital account, which has been already given in your question. Write it here, make a sum in a column, ठीक है, before the final column, and write the sum in the last column, right? Now write the heading of the current account, ठीक है, write the number of partners name, ठीक है, here, then just write the opening balance, start from the opening balances of the current accounts of the partners, right? Then add interest on capital, salaries, share of the remaining profit, interest, ठीक है, these three will be added, and interest on drawing will have to be deducted from the current account balances in order to find out the closing balances, right? Here what you need to do, you have to subtract, therefore these x should have to be in brackets. Okay. Now write the final balances of the closing balances of the current account and add the capital and the current account in order to find out the partner's equity balances, right? Now Here is a past paper question, right? Here is a past paper question.